Welcome back. You're watching 101 East on Al Jazeera, and with me in the studio are Dr. Jim Walker, CEO and Chief Economist with Asianomics, and David Eldon, former Chairman of HSBC Asia Pacific, and we're talking about the economic future of Asia and the rest of the world. Now, we mentioned a moment ago, David, that Asia is going to have some sort of suffering period, if you like, following what looks like a very grim picture in the United States. But how bad? And compare it to 97 and the post-97 situation, if you could.
There are a couple of issues. I mean, people keep on talking about decoupling. I think, for my money, it's almost impossible at this stage to decouple. I think the influences of the American consumer market buying from Asia in general is going to continue. So I don't think you're going to have a decoupling there. What I think is going to happen is this. I think that trade within Asia does now have an opportunity to become much more integrated. Perhaps leading in the future to a decoupling, perhaps, but not at this moment in time. I think China is going to be an interesting key in what happens. And I'm not quite so bearish on China as some other people are. I think they have a way to alleviate the situation there, but I think there's going to be an impact on Southeast Asia particularly. So I think Southeast Asia may have more problems in Asia specifically compared to perhaps North Asia.
Well, let's stick with China for a second. And you think China is flashing all sorts of red signals, right?
Yeah, I'm probably on the extreme of the bearish camp about China cyclically, not structurally, not secularly. I think the story of China is going to continue for many decades as they move towards a much more market-orientated economy. But cyclically, I think they're in a bad position, and I think they've made a lot of mistakes in the last 5 years, not least in not understanding what was happening in the US and elsewhere, and how much money was being printed and how much of it was flowing into China and how much that was expanding their productive capacity. They've had wrong interest rate signals, they've had a wrong exchange rate signal, they're now controlling prices all over the place that's sending other wrong signals. And I'm afraid China's going to pay a cost on that, and it's going to be a cost of a much sharper downturn than people are anticipating.
But the point David's making, and a lot of people are making, is that there is an internal market now in China. I mean, it's not entirely reliant on its export performance.
It's not entirely reliant, but there is an internal market. The big problem with internal markets in very open economies is that we're never very sure just how much they're independent of the trade sector. We have a way of dealing with that in economics. Of course, we look at the GDP statistics, we can estimate domestic demand, and from the domestic demand figures you would think that China's doing fine. Domestic demand is just consumption plus investment plus government spending. Excuse me, it looks fine. But the problem is that you just don't know how much of that domestic demand is actually related to exporting activity and importing activity.
Well, I mean, that brings up an interesting point, and that is to the extent to which we can actually trust the numbers we get from various economies. Do you think that people should be reading the press with some skepticism when they get the numbers, not simply from places like China, but the US as well? How reliable do you think this data is?
Well, I think in the terms of the US and other Western developed economies, you only have to look at the adjustments that usually come out 3 months later to the figures that they announced to just question how accurate those figures are. But in terms of Jim's points, I mean, I fully understand where he's coming from and his concerns about China. I take a relatively simplistic view of this in terms of China. I think, first of all, the authorities in China, I think they have understood what the situation is, but they've had very limited tools to enable them to do something about it. But what China hasn't done so far is really build up its domestic consumption. And this is where I think China may find a little bit of a savior, because I think domestic consumption is going to grow quite dramatically in China. But what that means is this. China previously has had a very high export record. What people never focused on was that 60% of those exports were made or created out of imported goods. Those imported goods that have come from other parts of the world, that's going to decline. It means that they will substitute with locally produced goods, which are going to be cheaper in the production of the goods they're putting into China. So I think China will still have the production. I think it will build its domestic capabilities and sell much more into the domestic markets. the people who I think are going to come out poorly out of this are the producers in Malaysia, in Thailand, in Vietnam, perhaps, who have been supplying the markets in China up until now. The only thing I would say about that is that, of course, what we're now seeing are Chinese manufacturers themselves going and setting up factories in Vietnam and Cambodia and these sort of places.
To go back to one of the earlier questions, and I'm still trying to get a handle on how bad all of this is actually going to be, because it's hard to grasp what the net effect is going to be for perhaps the three of us and the workers in the factories in China and Vietnam and Malaysia, the people on the streets.
I think one of the saving graces about Asia at the moment, Timur, is basically the Asian crisis. What happened after the crisis was a real conservatism that swept the region. And if you look at the numbers in terms of bank loan deposit ratios, so looking at the amount of money that people borrow relative to what they have in the bank, these have been falling over most of the region for the last 10 years. So it means that people are not leveraged. And that's a good thing at this point in the global economy. Leverage is going to cause the major problems in places like the UK, the US, elsewhere. Countries where leverage is low, where people have not been taking debt on, I think are certainly much more solid.
Well, what about, I mean, let me posit a very scary situation. In the UK, we've seen Northern Rock witnessing a run on the bank, which you would hardly have believed about a year ago. If the situation in China and the Asian economies is as bad, and the people do have money there, and they are as cautious as you say, I mean, their natural instinct is going to be to put it under their mattress. How much threat is there to the financial system from that potential?
I don't think the financial system in Asia has the same potential to do a Northern Rock. I think that the fact is that it's been very conservative for the last 10 years. They haven't done the same as they did before the Asian crisis. They haven't borrowed offshore. They don't have a mismatch in their liabilities.
Well, I mean, I don't know how far this debt crisis extends into Asia, but it's interesting to note that the Japanese stock market has been one of the worst performers, even though they're not that exposed to what's going on. I mean, it's got
a lousy economy, Timur. that helps as well.
That's true. That's true.
I think, remember this though, the Japanese for a long time said that they weren't actually involved in the subprime debt. They didn't have a problem. I was up there in December and heard that statement made to me, and within about 20 minutes I had a little SMS that came through on my phone which said, by the way, the Japanese postal system has just announced a 14.9 billion hit on its subprime paper.
So again, I mean, whose numbers do we trust here? It's an interesting scenario because you will pick up the daily papers and you'll have the stockbrokers and the mutual fund salespeople and the insurance salespeople, all of them trying to convince the world that everything will come out fine in the end. Is that a believable scenario?
They're just about as bad as politicians. They've got a vested interest in telling you that everything's fine, which actually I think is not a good thing, because investors need to know the truth rather than the whatever spin you want to put on it to get the money in and to get people to do something.
I'd just like to make a distinction about information, and Jim's absolutely right in saying, you know, these people who are singing their own book, as it were. For the major investors and the investment houses around the world, these guys have all the information at their fingertips. The sector that worries me are the small retail investors who have been saying, the markets are going up, we've really got to get into this because we're going to make an awful lot of money. And while the big boys are getting out because they've seen what the difficulties are, the small people are not certain what's happening, and they're the ones that get left with falling prices.
One final and very quick word. How long is it going to last? I mean, we're talking about 12 months ahead, but are you talking 2 or 3 years ahead, or are we going to be out of this by 2009?
Well, I think we'll be sitting in this studio a year from now talking about the same thing and asking if it's another year to go or another 2 to 3.
You agree?
I hate agreeing with him all the time, but I have to, yes, I really think so. I mean, 2008 is not going to be good news. 2009, at some stage, you may start to see some light at the end of the tunnel. Okay. Hopefully it's not a train coming the other way.
A gloomy picture indeed. Gentlemen, thank you very much indeed.
Thanks, Timur.
Thank you.
And that's all we have time for on 101 East. From all of us here, it's bye-bye.